Hello and welcome to another edition of Real Talk. Well, I'll just do a bit of a recap on the market to start with. We had 847 properties go to market on the weekend, which is absolutely ironic because there was 845 the year before, exactly the same weekend, only 2 properties the difference. 71% clearance rate, but last year, interestingly enough, the clearance rate was 79%, but this year 89 properties sold prior, which is probably about an 18% difference. So if you actually add the 71% to the 18%, it's a much higher result. And this is what I'm saying. The market is so different at the moment. They're almost holding pre-auctions before the auction. If they get 2 or 3 interested buyers, they'll start rolling a telephone auction, have a result and actually cancel the auction, which is one of the reasons it's so tricky at the moment for home buyers, with the market being so aggressive and it being quite problematic dealing with resi agents. So that certainly is continuing. The good news is interest rates are looking more and more favourable. 3.75 to 3.99% seems to be the range if you're prepared to lock your home loan in for 3 years. So, it's a very attractive rate. We're looking at investor loans now if you're locking them in at 4.2 to 4.7%, and self-managed super fund borrowings is still loaded about 1% higher, sitting around the mid-5s at the moment. So once again, it's a great time to be considering looking at some principal and interest payments off your investment properties. As you know, my formula is once you've paid your home down, start looking at building your super and reducing debt. It is the best way. Buy well, never sell, reduce your debt and focus on looking to retire on rental income and obviously your superannuation. Interestingly enough, we're finding the rental market is really recovering very strongly. We had quite a dip in rents in about 2010, 2011, but we're seeing most rents now returning to what they were. Another interesting sign, I was looking at the statistics, is a lot of the tenants, once they've finished their 12 months, are actually going month to month in preference. And I've done some research, and it's because they're really tucking away the money and looking at properties. So I think we're going to see a nice little jump in the first home buyers market in the next 1 to 2 years. I think a lot of people are really getting themselves organised. They know it's a formula. They know they've got to tuck in and save, and we're seeing real evidence of that in the market. Now, of course, in Real Talk, let's talk about the Brexit. I personally am not that surprised that England voted to leave the EU. I always thought it was quite curious that they never changed from the pound over to the euro, and I guess they'd be very grateful today that they haven't done that. It'll make the transition easier in exercising Section 50. I did read that Brussels are planning to make it not exactly an easy exit for them. And I guess in fairness to them, they're quite concerned about the other big powerhouses considering leaving the EU. But there's been a lot of facts and figures about how much money England won't get from the EU now that they've exited. And you see a bit of post-voting remorse, perhaps regret. But if you actually look at it, Britain were actually giving the EU $17.9 billion a year to be a member, and they were getting $12.9 billion in a rebate. If you do the numbers, they're $5 billion down in what had become, I guess, a trade and immigration dictatorship for them. So I think that things won't be as bad for England as perhaps people are considering, because if you do the numbers, you can do a lot with $5 billion. The other thing too is that what has really suffered is the currencies. For some reason, Japan took an 8% hit, and the only thing that Nick and I can imagine is that it must be that they've got some inter-country loans associated, because the rest of the market only took a 3.3 to 3.6% hit, which isn't a great deal, and I'm actually expecting to see that level out. Why? Because I really think the fundamental difference is going to be found in trade. And trade, as we all know, not every trade agreement comes to the table at the same time. I think it's going to be a matter of, one-on-one negotiations. I also think that if you look at Australia in comparison to the EU, we've only got about a 10% trade, whereas England is a major economic partner. So I think we're going to actually see it suffering currencies. Commodities in the stock market have almost returned within 72 hours of the Brexit announcement. So I think all in all, I also think internationally, and I said this last week, we're all so connected. I think we're getting a bit tired of being thrown from pillar to post, and with the pigs as we suffered a couple of years ago, and now the euro, and now this Brexit. I think really everyone wants stability, and I really think that's what we're heading for. So overall, it's an interesting time. The market is still very, very buoyant. Next weekend, I think we'll see a lull in auctions, etc., because obviously of the election. Having said that, I'm actually bidding for a client next weekend, so it's going to be a very busy weekend for me as a buyer's advocate. All right, I'll leave on that note. Thank you so much for joining, and I look forward to joining you again in a week's time. Thank you for listening to Real Talk.